there is a lot happening in the market right now. But in this video, we will actually look at what the Bank of International Settlement is actually highlighting and what can be the potential consequences. And if you already know what Ripple and the on-demand liquidity platform does, then you may also have an idea about how things have been evolving. Now, this is not like last 5-10 years. We are literally looking at recent past. And we are looking from World Bank, Bank of International Settlement, congressional research, all these documents and reports which give you this clarity of what the G20 is actually looking at and what they are literally talking about. Now, it's not just about pure speculation here. It will be directly showing you what the document actually highlights here. So back in the days, they are talking about 3 million transactions in 2020 for RippleNet. But we know recently it showed like 40 billion in transaction and 20 million transactions. So that's like the transaction went sky high. It went parabolic. Why is that? So when you actually look at this fintech here highlighted for this kind of a use case of financial messaging and clearing and settlement service, which is the most important part here, right? So when you are looking at the current situation of the world, and literally $80 trillion was the recent news. You can actually see here, $80 trillion is kind of the debt cycle. So that's the private sector end. The World Bank, the central banks, IMF, all of them may have to step in at one point. What will that mean for the entire ecosystem? Because not everyone in the world is in fintech, and not every fintech is in crypto. Now you see one firm in crypto, in fintech, and in new financial system. So when they actually talk about the Payments Association, and you see all these other guys from Santander, Accenture, NatWest, banks, payment providers, like MasterCard and others who have that wide reach, and then from Ripple. So it kind of gives you one clear idea that if someone else is actually giving you a negative thought process about the future payment system and it has nothing to do with RippleNet, XRP Ledger and the Interledger protocol, they are just trying to put a cloud in front of your information. So what you really will have to look at is what the world is going through right now. Not just the talks, but look at what they are doing. So the Swiss bank is giving you that idea, right? What's happening on their end. And then we happen to see like the macro fundamentals are evolving on one side, and on the other side, it actually shows like, okay, things are turning. And we literally saw like there are banks highlighting you trigger points is here. Next 3 to 6 months is going to be dark zone in that category. Then we come here and we see Stefan actually putting out great information. So if you have a doubt about what POW means, what POS means, how they works, and what's the difference between that and XRP Ledger and how they have built this one, that's going to be really important to understand the fundamentals as you go through these documents and get the idea of, yes, the banks, central banks, payment providers, all these big guys understand this. They understand it in depth, and that's one of the most important stuff. Because on the other side, you are literally looking at how things are evolving, how things are dropping, and this kind of usually gives you an idea of how markets can actually go. This report, especially for the Canadian market, but you will actually see something similar for the entire globe, right? All these areas where you actually have seen housing bubbles is going to pop. And as it pops, now this is from Britain, this one is in Canada. So you're looking at 2 different geographical regions, and all of them show you one single thing, right? Then if you are there and then you're talking about this liquidity, you may have to go through other documents and then look at what really is happening there as well, right? Different payments, sectors, geography, and regulations happen to come on one interoperable ledger. What's that and how it works? That's what we're going to break down. Welcome to the Scientific Investor family, where the normal retail guys learn how to become the next top 10% of this world. Now, when we look at the crypto market, it is again mixed. We are slowing down, we are correcting, we are negative for the day for most of these big assets. And there's a reason for that, right? We've talked about this too. Now, how would we actually understand what the majority shows us, right? So when we look at all these information, you kind of get a little bit more clarity, right? One is the dollar, which is showing you a pattern which can break to the upside. Another is Bitcoin, which kind of is on a shorter time horizon because both of them are, to show you what the possibility here is, right? We actually literally talked about the crypto market having this narrative. So if you are to break to the downside, okay, now it's not that bad because dollar need this one. It broke to the downside. It did not actually go higher, retest that before it actually broke to the downside. So for us who are standing on this other side and looking at the market, what it really means is like you just zoom in and you're like, okay, fine, I do understand dollar is slowing down. But usually when the dollar slows down, what happens with the stock market is it goes up. But right now, you're not actually observing that. Yes, you do tend to see a short-term support here. But on the macro, you zoom out, you see it getting resisted here, which means you can literally go back down and there is some more space to the downside. So you go look at individual assets, the big caps, and you're like, okay, they are also trending lower, giving you lower highs, and the support is here. They can literally drop. You go look at Tesla, Netflix, all of these, and you kind of get like, okay, some of them hit the support and is bouncing. Some of them are breaking through a level of support which does not look good. So you literally have to see a bounce and a shake off. Fine. So now that's for the market thought process. So if we actually look at XRP on that trend to give you that thought process of what's happening with XRP, it's closely following the crypto market. We are still here. We did not actually happen to break to the upside. If you put the resistance clearly, it will be somewhere close here. And this is your trend line, which you're trying to break to the downside, which on the short term is like, okay, I'm going to follow the crypto market. I'm going to drop a little bit. So you can literally zoom in, get inside of that and see what the price action is showing you. We're breaking to the downside and retesting right now. If the retest fails, that means now we are looking for the next support range, which would be close to here, 0.34, 0.33 range. So when Bitcoin drops, XRP will also follow. Most likely, that is what we are going to see. Otherwise, what need to happen in the market is that this support becomes so strong or buyers become so happy to buy at this level, which I think may not be the case. We may still see these levels and getting more buyers interested. Now, going back to what we were discussing, say the world faces something big and it's really huge, right? And we also get a lot of different talk about, okay, Xrp being a stable coin. And that too, people put perspective like it's going to be a stable coin at $10,000, $20,000, $50,000. I even recently saw people claiming it's going to go to $1 million. And I'm like, if this is the narrative where they say it has been labeled as a stable coin by World Bank, yes, they use that term. I agree. But read this completely. Stablecoin refers to a class of digital currencies that are relatively stable in terms of their price. Stablecoins offer instantaneous processing and security of payments as many cryptocurrencies do. They also offer stability with respect to the parity against fiat currencies. So for them, this is what actually matters because they are moving from one currency to another. Two digital currencies that fall into this category are RippleNet's native digital asset, XRP, and Stellar's XLM. So they actually give you the perspective of what is happening here. They are more than any other assets. They give you the benefit. They are faster, they are cheaper, they are more efficient, right? So the corresponding banking networks don't want this to enter into that space because it's going to cut their profits. And that's why we see SEC which is like, eating the breadcrumbs from the Wall Street and the bankers trying to slow down on this technology. This is from the World Bank giving you the idea, and they're going in details about how the transaction works, how the system works, and they kind of clearly understand one thing. The total supply of XRP decreases over time, and in theory, it means maintaining its values for sure, right? So when the price is there at one point and you see supply reducing, if you have the same demand or the demand is going higher, which literally means the price should go up. So you go back to all these documents where they talk about how they were doing transaction, which was like, in 2020, 3 million transaction for RippleNet was like 5 times of that in 2019. So in just 1 year, 5 times. Now in 2020, they went 20 million transactions. So that's in 2 years going sky high. So you literally see a trend happening in this segment. Why is that? Here they actually give you the narrative. Over 55 countries connected with that. And that's why when you go look at recent ones in this year, you actually see the on-demand liquidity which uses XRP. So the fraudsters will try to say it's RippleNet, not XRP, but those guys does not actually take time to read through this, or at least they close their eyes at that point. Fine. So here, it actually gives you one narrative. Singapore is actually showing you what's happening there, and it literally means it's helping their small business, right? So in fact, an estimated USD 3.5 billion is spent annually to address issues associated with this liquidity and treasury. And right now, FOMOPay is able to do these payments 24/7 through Euro USD. Now, you can actually see the corridors which are being open and how they are moving money. So it's not just one institution doing that. You will see different institutions in different country using this for some reason. One, it can be towards business to retail. They're taking money, they're sending it to another one. It's remittance. Another one, it can be business to business. All of these are actually using this for one thing, right? They are leveraging XRP, which is for cross-border payments. So they are literally using the on-demand liquidity for a reason, and they are achieving their targets. So that is one of the biggest reason why you actually see this getting through different nations. So the on-demand liquidity, again, that's XRP ledger using the digital asset XRP, right? Going through different regions, different companies, all of them happy to use that. And that is already stated clearly in all of this. Now, the speculation part from my end. This is Bank of International Settlement. You come onto this document and you want to actually read through what they talk about stable coins and other assets. Now, you may have a little bit of confusion, but we'll break it down slowly. Since the CBDCs are direct liability of central banks, there is no need for a payment service provider as a wallet provider or payment validators to act as a liquidity provider. So you can be confused like, okay, on-demand liquidity is trying to give you liquidity, but they're saying they don't need liquidity. But what does it actually mean? However, those payment service providers acting as a forex providers must have central bank digital currency accounts with the central bank to hold and transact both currencies. Now that is the important part. That is where you actually see Ripple positioning itself, working with all of these different central banks in the back end. That is going to be one of the biggest use case for XRP ledger connected with the interledger protocol as soon as you get these central bank digital currencies rolled out. So different countries have different things, but right now, even India is piloting that. That means one of the biggest population there in the planet is actually trying to figure out how things work in the central bank digital currency era, which means soon you are going to see the BRICS coming out with that, and they are trying to trade within that. All of this goes back to the payments. And here it's G20 payments program trying to talk about how the interoperability comes in. because the conflict is like, achieving that on both domestic and cross-border segment. So you come back here and you see the talk about what they really want, like to facilitate the cross-border payments between financial institutions, the corporates and all. Their important stuff here is the interoperability. That's why when we talk about ILP, XRP Ledger, it gives them their advantage too. It kind of shortens the transaction chain, so it's not that correspondent banking network system. And then it reduces the cost, which is the best stuff, because at one point it's like instantaneous, and then the transaction speed is fast, it's instantaneous, and lower end user fees, which most of us would like. So automatically, when you remove the friction from this cross-border arrangement using these third parties, it is going to help things work. And they understand this, and that's why they are looking to actually implement an infrastructure which is going to give the businesses and individuals the access to affordable cross-border payments. But yeah, they will retain their part, which is the central bank digital currency, which is held with the central bank ledger, all of that. But if you do understand this happening in that era, most likely won't happen. What may happen is this will happen first, and then we'll move on to the new financial infrastructure, which is going to be that CBDC, and most likely they may start with a clean slate. Now, if you say they have $80 trillion in debt, they may have assets which are in negative equity. Even though the prices are down, rates go up, asset value goes down. Fine. Now the rates are reaching the top and it's going to slow down or correct down. We'll see how that goes. Automatically, the asset prices go back up. Not in a day. It will take time. So given that perspective, now you need a big repository of value to connect into this CBDC environment. And that's where, whatever we talked about here gives you that idea that most likely the price may have to go much higher because the usage is going to be one. Then at the same time, you also understand that speculation will enter, and it will just not be the speculation from our end, it will be from the institutional end. Because if the World Bank is giving you the idea that it's a bridge between two currencies and it's an open source blockchain which is decentralized, unlike a lot of fraudsters still come out and put that narrative, this is centralized. This is like, literally the World Bank document where they talk about a system which is decentralized and you can use it. And it come down and give you the idea, Bitcoin or Ether do this stuff. Ripple does not. Run on proof of work or proof of stake, which is the huge thing. Instead, they use BGP, which is Byzantine General's problem. So it actually gives you the narrative that to validate account balances and transactions, they use gateways. And that's what central banks, governments, bureaucrats, they will always want the control. They will never say, okay, we have the central bank digital currency here. You can use Bitcoin if you want. They won't say that. They'll say you have to use this. And that is where getting positioned for becoming an intermediary in that arrangement gives you the real value. The pure fundamentals is based on this. Now, you can argue that that's not a great thing, but if this is literally happening, institutions are entering into crypto, automatically they will also look. Now, they have bigger research and development team than us, so automatically if we can do our research and get this and understand this, most likely they would also get to that point. It's just the learning curve. And as soon as they do, you will literally observe the price of this asset going higher. Now, coming back to the technicals. Yes, we do see this narrative of slowdown, but you also see a trend line here, right? So if that trend line happens to break to the upside, now this is on the positive note, right? You try to take on these and be a pattern-based technical analyst. So you are like, okay, this went upside and now you're consolidating inside this. So most likely at the midpoint where you are getting supported, you may bounce. So if we break this one, that's a good news. Now we can go test this high. Now, all of these what we talked about on the charts, it's actually short term. So if you are getting worried about a drop, don't worry. It's not talking about it going to zero. It's literally saying the next support is going to be somewhere close to 0.35. But if we manage to break 0.42, that's going to open your floor, and then that move towards the next roof is going to be 0.5, which will be fine. But in next 1 week, when things evolve, it will be really interesting to see what the CPI numbers come out, how the Fed reacts, and the market moves. Because dollar is what you should be keeping your eyes on. If dollar is dropping like a stone, it is going to be great for any assets denominated in dollar. And during the time when dollar went up, you saw your portfolio going down in dollar terms. And now when the dollar goes down, you will observe your portfolio going up. And this is asymmetrical. That's what a lot of people get confused with. Say dollar went up this much, say your portfolio went down 70%. Last time when the dollar dropped 13%, how much did your portfolio went up? I saw a lot of people going like, 3x, 5x, 10x. So 10% to the downside just gave you a symmetrical upside. So if you are in the market and observing what's happening right now and literally watching what the dollar is doing, this is not bad. For me, in my opinion, I'm like, okay, there can be short-term volatility for sure. But if you are zoomed out and you are a trend, pattern, whatever, technical guy, you're literally saying that, okay, I do understand that at some point, I don't know when, this is going to come back and test this bottom. And it can be 95, it can be 96. If it's sharp drop, you're going to look at 92, a wick to the downside, 90, but most likely say 93, 94. Now, we actually have to look at how much time it took last time to do this. That was 400 days. That's not a short time horizon, right? More than a year. So then you put the same and you're like, okay, that means the end of next year, this can bottom. Then you also have to ask one question. Okay, if that's the case, last 2 times it took 420, 450, say on average 430 days. When did the crypto market go up? It wasn't the last 100 days. It was in that time where you got the real blow-offs, but before that you started grinding slowly to the upside. But right now you're in the crypto market and you're looking at this and like, nothing is really grinding to the upside. You don't literally see any of that happening in the market, right? So it has not yet started. You will literally have to wait and see how things go. Now, some of these news is like, coming from different countries does not actually look good, but you will have to understand we will be forced to use these kind of technologies. Great. So the fundamentals and the upside using technicals is there. What should be is your patience. If you don't have that level of patience, the market can remain irrational more than you can remain liquid. And that's the hard part we all face, right? You, me, and everyone is trying to gather liquidity and stay liquid because our bags are packed. What we want to happen is slowly happening. Remember what we were talking about, right? As we were going up, we were like, okay, we were focusing on the divergence. We saw a divergence. It hit the roof. It is now coming down. So if you held through this hard time and now it's turning, now is the time to hold on even stronger. Because say, for example, you bought for 10,000. You're down 70%. You come back to 10,000 and your temptation would be so high to take it out that all this time which you waited with the inflation, you literally lost. But if you maintain that level of patience as it goes up, now you'll beat the inflation, you'll make profit, and you will have prosperity. So keep that in mind. And if this video helped you in any way, please do hit that like and subscribe button. And if you have another 3 to 5 minutes more, please do visit this channel of mine. I hope this helps all of you guys. So that's it for today. I'll meet you on the next video. Bye-bye.